Hey there.
Hey, hello, Dara. How are you?
Good. How are you?
Amazing, amazing. We were just waiting your keynote speech.
Great.
We had amazing speakers in the beginning, and we had some vendors presenting their companies and projects. And yeah,
Fantastic.
we will be closing today with your keynote speech, and we are waiting for it. We're gonna start in like couple minutes.
Okay.
I will.
Perfect.
Do you have the presentation?
I do. Where should I put it?
You can just screen share.
Okay, let's put on the, let's see if I do it like this.
Yep.
Yeah, I'm just trying to,
It's visible.
yeah. I'm just trying to move these. Okay, there we go.
Yeah, it looks good.
Okay, perfect. Let me
Yeah,
just,
I'm also checking inside the Decentraland at the same time.
okay,
And yeah, so if something I will be letting you know. And yeah, let's wait for a couple of minutes because some people are joining.
great. And how the sound is okay? The sound sounds good.
Yes, everything is working perfectly.
Okay, perfect. Yeah, well, thank you guys so much for doing this. This is really awesome.
Yeah, it's so exciting. Like it's the first time we are hosting this huge conference in Decentraland, actually in Metaverse. And yeah, like we want to show people that metaverses are for interesting stuff too, not just only games. And we can having amazing conferences from around the world, and it enables us to have speakers from different parts of the world, also listeners from most of the continents. So yeah, it's a pretty new experience, and yeah, like I think we're gonna see more and more coming like this. And actually, I loved your topic, like mankind's evolution to Web3 and they participate to your economy. So it's like crazy movement how we are moving to this space, right?
Oh, it
So
really is. It's such an exciting time. And I wanted to put something together I think is, really interesting and optimistic too, because there's so much, there's, oh, here we go.
oh, sorry, we just recording the speeches.
Okay, no
Sorry to
worries.
interrupt. Yeah.
Oh,
So what you were saying? Sorry for
Oh, no,
interruption.
I was just going to say, it just really, truly is, and it's an exciting time to be alive. I mean, this is, and watching the evolution of all of this, and especially especially how decentralized innovation is really making an impact, because it's going to change everything. It's changing media, it's changing finance, it's changing governance structures. I mean, everything that we know about the world is going to completely change because of decentralization. And, it's true democracy and freedom. I mean, it's an exciting time.
Yep, totally agree with you. And it's like there's so many amazing companies are doing projects now and coming in. Yeah, like and also like tomorrow we have amazing day also continuing of this conference.
Yeah.
If you have time, you can join inside the Decentraland, and we're gonna have Decentraland co-founder. We're gonna have also some people from Decentraland funding DAO, and yeah, so it's gonna be very interesting tomorrow.
Yeah, I'm excited.
Yes, I'm gonna check inside the. Okay, people are coming in.
Great.
Nice, nice. Everybody knows that we are starting in 3 minutes. We
Okay.
had agenda up, and
And how
yeah,
much
let's
time
wait.
do I have? So I'll just keep mindful of the clock.
Yeah, we have around 30 minutes,
Okay.
including questions. So you can go ahead and talk. Probably it's more than enough time for the keynote presentation, and we're gonna might have some questions also from myself from auditory. I,
Perfect.
I will read out it for you. Yeah, and Carl is also inside the Decentraland. He's listening us from inside. Yeah,
Hey, Carl.
yeah. And we have around 6 people at this moment inside.
Cool.
Yeah, it's always difficult when playing conference to get all the time zones. For
Right.
example, now, yeah, like morning, almost like midday in US, and then Asia already sleeps.
And Sunday and right, the time change. Yeah, exactly.
And yeah, daytime savings time change, like indeed, and also like yeah, because in Europe it's also like getting late night and it's Sunday night, and tomorrow people have to work on Monday, so it's like challenging times to choose, but
Right.
yeah, but we had to do it, and we have all the recordings of this conference. We will be later on like
Perfect.
putting in
Perfect.
socials. Yeah, so whoever gonna miss it, they're gonna have the opportunity to listen after the event.
Perfect. Well, I'm grateful for the opportunity and excited to do it. So,
Okay, and Carl wrote in the chat, "Hi Dara." He's saying hi again.
hi, Carl. Thank you again. I'm excited.
Cool. Okay, so I think like we are good to go. So we have our last speaker for today, Dara Albright, and she will be talking about mankind's evolution to Web3 and participate to earn economy. Yeah, it's amazing topic, amazing title, and great finishing up of today's conference. And I let Dara speak and introduce herself and continue with amazing presentation.
Excellent. Well, thank you so much. And really, truly, thank you so much for having me today and for everyone participating and listening in. I'm so excited to do this. This is actually my very first presentation in the metaverse. So that is really exciting for me. And, you know, we're really witnessing such an incredible time and moment in history. So, you know, just everything that even what Decentraland has put together and, you know, really creating this new remarkable really virtual world where people can engage, they could communicate with one another a new way, they could connect, they could play, they could create and monetize. It really is truly an exciting moment in history, I think, where we're really seeing this significant shift into this new economy and new world. And that's really what I'm going to focus on today. I'm going to talk a little bit about what I think all of this decentralized innovation means and how it's going to impact not only macroeconomics, but also our personal finances as well. And we're going to talk a lot about retirement because I think that's a big piece of it. So thank you again for having me. Really excited to be here today and with all of you today. So hang on. Oh, my slides are not moving. Hang on.
Yeah.
Huh. Oh, there we go. Okay, perfect. So today we are going to cover how Web3 and decentralized innovation will impact macroeconomics, media, personal finance, retirement, and the capital markets. But most importantly, how you all could capitalize on this epic transformation. So I want to start by saying, first of all, everything that we were ever taught about basic economics, business, and investing is completely wrong. Essentially, technology and decentralized technology is basically obsoleting everything that we had learned in the past about economics. Starting with basic business principles, they were wrong. We were taught that the cost of something is what you give up to get. Well, I'm here to show you multiple examples of ways that people are really building true economic value simply by going about their typical daily day-to-day activities. So we were told that you need to have money to invest money. I think that is completely wrong too. And we're going to talk about ways that you could actually invest create money to invest. And that's what this is all about as well. We're going to talk about why basic economic principles are wrong. And I think this is a biggie. You know, we were taught that savings plus consumption equals disposable income. Well, fintech is basically obsoleting this equation as well. So decentralized innovation has unleashed a new economic solution. It's called participate to earn economics, and it will foster prosperity. It's going to stimulate economic growth. It will narrow wealth gaps, and it will help repair a failing and unsustainable retirement system, as well as a failing and unsustainable healthcare system. Because of P2E economics, you won't need to go into debt in order to have a quality education. You won't need to sit back and watch big tech and legacy media get rich on your eyeballs and your content. You're going to be able to make your data earn for you. You won't need a corporate or a government job to have quality healthcare or a quality retirement plan. And furthermore, and I think this is a big deal too, there's no reason not to have a dramatic reduction in taxes. Because with more people prospering, government won't need as much money to support, welfare programs and the such. Now, I say there's no reason not to have a dramatic reduction in taxes, but we'll see where that goes. But the truth is that with P2E economics, policymakers can resolve all of America's retirement challenges, and any nation, in fact, can resolve all of their retirement challenges without raising the retirement age, increasing payroll taxes, cutting promised retirement benefits, or even disrupting existing workplace plans. So what's really exciting is that the very same decentralized innovation that is transforming finance is simultaneously transforming the backbone of is simultaneously transforming media, which is really the backbone of modern economics. And, the only difference is that this time around, the wealth will be generated more evenly. This is a really cool slide. We've been here before, but this slide depicts is how each new invention in mass media, mass communications, has impacted the stock market. And so if you see that with each new invention in mass media, starting with the radio back in 1920, each one created a more meaningful and dynamic way for brands to engage consumers. And when consumers are engaged, essentially they're spending. When they're spending, we see sales go up, we see revenues rising, we see jobs being created. There's a whole economic effect that follows. And today, what we're going to do is really focus on Web3 and what that means, because, we are really, really in the early stages of this. I mean, if you look at this chart and if you see the yellow lines in the chart, that is really what that shows is the new invention adoption growth. So you see the tiny yellow really at the bottom of your screen here where it says 2021. That's where we are. I mean, the potential for Web3 is truly, truly enormous. And I think that it has the power to really, I believe Web3 is more powerful than all of the other innovations in mass communications that came prior to it combined. And we're going to go into a little bit of detail on this and what this means, but it's an exciting time. So I want to start with a little bit jumping into the macroeconomics aspect of this. And, you may have taken Econ 101, and if you did, you probably have studied Keynesian economics. It's basically the macroeconomic theory of every single nation that's been, around since basically the Great Depression timeframe. And it's basically what every single nation has been relying on for the past 100 years almost. But Keynes, and it's the reason why it's flawed is not that Keynes he was wrong, but he was wrong because now we have technology to really see things in a different light. So the greatest macroeconomic misconception is that we must forsake savings for consumption. And this has been a really, really, this has been a really big problem. I mean, this is really what, this is what, so we spent the last 100 years essentially because of this, condemning savings. And because of that, nations as well as individuals have been stuck in these debt spirals. So these basic, the basic tenet of Keynesian economics says you can't spend and save at the same time. Well, technological innovation says otherwise. It made it possible for savings and consumption to actually occur simultaneously. And that's a huge deal because Keynes came up with a theory, and it's called the paradox of thrift. And the paradox of thrift basically says that if individuals are savings, that's causing harm to the economy. It's because it's causing, a nation's, it's hurting the nation's productivity, which then in turn hurts the individuals themselves. So we've been stuck kind of, like I said, in this debt spiral, but that is all changing. And by the way, I just want to say that this is actually, if you see on the right side of your screen here, this is actually a page from my Economics 101 course in college in 1991. But if you look at this, essentially Keynes was wrong, and there's a new game in town. There's a new macroeconomic theory that I call participate to earn economics, and I think it's a much better macroeconomic solution. So what is it in a nutshell? Well, P2E economics is an economic system that enables participants to be compensated for their contributions well beyond traditional labor and investment. So those within the participate to earn economic ecosystem are able to generate supplemental capital through other types of self-enrichment and gratifying activities, such as learning, playing, exercising, engaging with brands, and most significantly, consuming. So what participate to earn economics does is it allows even the poorest of individuals to create wealth while obtaining knowledge, getting fit, and saving for retirement. So here are some of the key differences between Keynesian economics and participate to earn economics. With Keynesian economics, because it sacrifices savings for consumption, that leads to mass poverty. That's a national retirement crisis that is looming everywhere we go. It creates undue strains on government assistance programs. On the other side, with participate to earn economics, because you're able to build wealth without forsaking consumption and save, this mitigates poverty. This will thwart a looming retirement crisis, and it reduces the reliance on government assistance programs like Medicare, Medicaid, SNAP, etc. With Keynesian economics, it promotes reckless spending, which of course leads to inflation, stagflation, which is something that today's economists are very worried about, and there's absolutely no solution in the Keynesian toolkit for stagflation. And all this leads to national security issues. With participate to earn economics, on the other hand, we'll be able to curb inflation, we'll be able to dodge stagflation, and we'll have greater national security. Of course, as I mentioned before, that's one of the reasons in Keynesian economics why taxes are so high. We have to support all of these spending programs. But with participate to earn economics, we have a real true ability to keep taxes low. And then, I think that the really key things is that participate to earn economics could provide a true resolution for the healthcare and retirement challenges that the country is facing today. And most significantly, with Keynesian economics, you see an economic system where the wealth disparity just keeps becoming greater and greater and greater. If you look at the working class and middle class are hit much, much harder even by something like inflation. So with participate to earn economics, you're able to have everyone benefit and prosper on a more equal basis. And as we get further into the presentation, I'm going to show you some really interesting slides on just the wealth disparity and how we think that could be narrowed. So here are some of the elements of the participate to earn economy. There's the play to earn, surf to earn, learn to earn, move to earn, refer to earn, spend to earn. And we're going to dive into each one of these a little bit individually. So play to earn, many of you out there probably doing this now. You guys have really been more on the forefront of what's happening in the metaverse, and I would imagine as well in the gaming space. The best example of play to earn is Axie Infinity, where during the COVID-19 pandemic in the Philippines, they created a way for the people in the Philippines who were basically locked down, unable to work, as a way of earning a supplemental income through gaming. And they were able to earn a couple of $100s a month, which was really on par with their regular salary. So, I mean, it's pretty amazing, the potential here. There are some NFT gamers that are earning, we're talking, over $700 a week. I mean, this is significant. But I think really with play to earn really just set basically the model. It just showed us what is possible and what could be done. But now we're seeing, play to earn was really just the tip of the iceberg. You may have been seeing what was happening in the move to earn space. There's an app called STEPN, which is backed by venture capitalists. It's a Web3 app that allows those who engage in physical exercise to earn tokens. And at the peak this past spring, users of STEPN were earning $30 just by running a short distance. So, the potential is just enormous. And already STEPN has, and this is probably even a little bit dated, so it's probably even higher than this, but they're growing their monthly active users pretty substantially. But it basically enables people the ability to earn real money while exercising and keeping in shape. And the potential for the move to earn fitness app market is huge. I mean, they're expecting it to be an almost $700 billion industry by 2030. And that has enormous implications just for our healthcare industry. So education is another area, just like finance and media. Education is truly undergoing a significant transformation. Now, you probably are all familiar with some of the with some of the crypto platforms, and they provide you an ability to learn about new tokens, and then you get to earn those tokens, and they put those tokens in your wallets. This has been going on for a while. Again, I think that this is just the tip of the iceberg. I think where learn to earn gets really interesting is that when we look to metaverse education, and we're going to start to see learning becoming way more immersive and way more monetizable. So learning in the metaverse gives people an ability to, number one, it transcends, geographic barriers, but it really helps bridge the knowledge and wealth gaps because it democratizes access to education. Everyone has an opportunity now, and it will enable people to have a more diversified and well-rounded education. There'll be so many more classes and types of studies that they can learn. And look, I mean, even in college now, you take this for example. I mean, they're not teaching this in college. This is so early on. This is so on the forefront, and people are going to college now, and they're not really learning all about digital assets, Web3, how all this innovation is changing the, changing the jobs of the future. Also, what's really interesting is that there have been studies that have shown that students learn 4 times faster with VR than in traditional classes, which I thought was interesting. But, think about this too. We reduce a lot of risks when you're learning in the metaverse. Look at just the 3D simulation. It reduces all these safety hazards, like for professionals such as surgeons, for example. They could learn surgeries and perform them, practicing first in the metaverse without, before practicing on, a live body. So I think that there's just really amazing opportunities for new ways of learning, new models of learning, but also where I think it gets interesting is to capitalize on that knowledge. So one of the things that we're doing with D-Wealth Education is people have the ability to learn about some of the new innovation out there, some of a way, especially how it impacts personal finance, but then to also earn tokens while you're learning, and that could be used to basically get people started on their financial journeys. So what we're seeing here is a truly fundamental shift in media, and Web3 is really changing everything from the way we surf, the way we browse, the way we stream, the way we create, the way we share, the way we earn. And what's happening is that consumers are becoming producers, and we're seeing advertising revenue models truly being turned upside down. And and I'm going to go into this in a little bit more detail, but what we're seeing is that Web3 will really transform just the whole advertising industry, and it will enable the ad money to be diverted from big tech and Madison Avenue to go directly to the consumer. So this is what I think the future of advertising will look like. Here are some really cool companies in the surf to earn space, but essentially you basically have more control over your data and your eyeballs. So let's say, for example, you're surfing the internet and you see pop-up ads, and maybe you don't want to see those pop-up ads, so you could opt out of seeing those pop-up ads. But maybe if you were being rewarded and earning tokens for seeing those pop-up ads, maybe you would accept that. So you could actually monetize the way you surf. You could also monetize your data by allowing companies to use your information for marketing purposes. So, when you create in the, the Web2 space, when you're on social media and you're creating content, that's your ideas, that's your creation. And Facebook and Twitter and, all of the social media companies in the Web2 space that are centralized, they are basically taking your data and monetizing it. They're taking your information and they're selling that to advertisers. And they've gotten rich off of that. Now, because of what's happening with, decentralization and media moving into this new Web3 era, we're going to be able to take back control of our own data, and we're going to be able to decide if we want to sell our data and profit from it. So, in the not too distant future, consumers could easily be earning $20 to $30 a month just by surfing the web. I actually did a great podcast about this whole topic just last week with Daniel Bland, who's the co-founder of Cirrus Foundation. And if you get some time, check it out. I mean, it was, the guy is just so brilliant and so insightful, and really talked about just how the advertising industry is really undergoing this dramatic shift. And I think you'll be really interested in it. Another area, in addition to the surf to earn, is the refer to earn. So, we already know that affiliate marketing is a big business. there. Some people are earning, thousands of dollars a month just doing it. Now, you could do that too through this whole new, through this whole new world, especially if people who have larger networks. So according to Daniel Bland, who I had done that interview with, he thinks surf to earn could be a $10 trillion industry in just 5 years. And, refer to earn industry is really scaling. I mean, it's expected to be an $8.2 billion industry this year. So here's another area, spend to earn. And this is an area I'm really passionate about. I really get excited about. And this is, I think this is a really interesting area. So, and we've started to see a lot of massive growth in this space. So you might be familiar with Roundup apps. Roundup, or for savings apps, sometimes they're referred to. But essentially, they are apps that enable us to to save while we spend. So essentially, I mean, Acorns is probably the most well-known company in this space. You basically connect your credit card to the app and you go shopping, and let's say you buy something at the supermarket for $99.50. You basically, the supermarket gets the $99.50, and then 50 cents, you pay $100, but the 50 cents will then go the 50 cents that you're you pay $99.50. I'm sorry, you pay $100 for a $99.50 item, but the 50 cents then goes into your Roundup app. And you're basically enables you to essentially be saving as you're spending. There are some other cool names in the space that are doing it. Worthy is an app that I was actually one of the test pilots for. And I'm going to talk about that in a minute, because I was able to, using the Worthy app, I was saving, significant money that year just by doing this. And it was, found money. So here, like I said, massive growth in the space. Here's, Acorns growth in terms of valuation as well as in terms of users. And if you look at how people spend by generation, here's basically, this is from the US Bureau of Labor Statistics, and it shows how much each generation would spends on a monthly basis. So Acorn says that their average user invests more than $30 a month through roundups. I mean, and if that's so, based on their user base, they likely added, $3 billion into savings. Now, I did this personally, as I said, with the Worthy app, and my average, I came to a calculation that my monthly roundup was, or an MRU, was 0.8% of my monthly spend. So if you look at the expenditure by generation, that can range anywhere from $28 to $56 just by spending, that you'll be saving just from spending. The difference is, just going back to that for a second, but this slide, all of these companies, where you are able to invest those roundups, that's basically the big thing now. So Acorns, it's primarily ETFs. I think, starting to see in the, get involved more into the crypto space. Some of them you could invest into, it depends. You don't always have a lot of flexibility of where you could put that money. So I think that will be an interesting thing. And I think ultimately we'll also start to see more of that money being allocated or investing into, something like staking. So all of this is basically what my husband calls couch cushion earnings. So can you retire on, all these little bits of money that you're earning every month from the participate to earn economy, from your Steppin' app and running, from your Worthy app, or, Roundup app, or your Acorns app, or surfing the net. I mean, could all of these little savings, could they add up, and how do they add up? So what I did was I had a little fun with some numbers, and I went with, let's say a 20-year-old today started with $10, put $10 into an account, and that was generating, let's say 7%, annually. And let's say, doing play to earn, maybe they were earning $50 a month, surf to earn 20, learn to earn 40, move to earn 74, refer to earn 25, spend to earn $30. And that came up to a total of $239. $239 at a 7% annual interest rate will basically, yes, that person will retire, 20-year-old will undoubtedly retire a millionaire by the time they're 75, a $1.8 million just in this couch cushion money. Think about it now for a 15-year-old today. Every 15-year-old today starting could be a millionaire by their 62nd birthday. Essentially, every single Gen Zer will retire a millionaire or participate to earn economics. So I want to just talk a little bit about some of the broader economic impact of P2E economics as we finish up here. America is facing a retirement-induced financial crisis of epic proportions. We know this. I mean, 1 in 3 Americans have nothing saved for retirement. Majority can't even, afford a, $500 emergency. All 3 retirement pillars are inherently broken. Social Security, the pension system, as well as the defined contribution or 401k system. Now, what are some of the solutions that our best and brightest economic minds are coming up with? I mean, they basically say save more, spend less. That's not a solution, that's a cliche. I also read a very upsetting report in the Journal of Retirement that basically saying that that a younger generation shouldn't even be saving at all when Social Security will be there to replace the majority of their pre-retirement income. That is just a complete lie. And, it's been discouraging savings is what has gotten us into this mess in the first place. Without Social Security benefits, like 37.8% of American seniors will be living below the poverty line. I mean, they rely on Social Security. And we can't rely on Social Security anymore. This is basically the chart from 2020, basically shows that where Social Security system is spending more than it's taking in. So by 2029, it's going to be eating into its reserves. And this is before, this was actually even before these projections are based before COVID. So it's a significant problem. When Social Security started, there were 159 workers to support every one retiree. Now we're down to less than 3. These are the real numbers. I mean, unfunded Social Security liabilities are now amounting to $468,000 per household. Unfunded state pension liability, adds another almost $65,000 per US household. And, that's already when, households are already in, extreme debt. The pension crisis has gotten so bad that not even Pension Tracker wants to continue tracking pension liabilities. That's how bad. I went to go to their site to get data for this presentation, and basically this was the message I received. They shut it down. So, what's happening is that access to retirement plans are dwindling, and essentially today's retirement system, it does not support a modern workforce. The whole system is changing. Now, if you go back into, these charts are really interesting. This goes back to the beginning of the retirement, when we sort of introduced the IRA and then the 401k. And if you look, once America shifted from the pension-based system to a 401k-based system, we started to see a spike in the wealth disparity, and that has just continued and continued to grow. And so the system just doesn't work, and it especially doesn't work in a workforce where more and more people are contractors. It just doesn't work. So what's happening is that seniors are facing an escalating gap between their income and spending needs. This was a chart I saw from JP Morgan Asset Management that showed the benefits that you would get from Social Securities, as well as your withdrawals from, let's say, your typical 401k plan. But none of that meets your spending needs in retirement as you age. So what I did was I basically went back and put those numbers of what it could look like with our couch cushion money, with P2E economics. And not only does P2E fill that gap, it exceeds it significantly. So I kind of went a little bit into this before, and I'm just going to wrap this up with just a few slides. So we end up, we'll conclude here just momentarily, but I touched upon this before, but here's where I really truly am so optimistic. Every single new invention in mass communications has really, as I said, created a new era of economic prosperity and and market growth over the last 100 years, starting with the radio. And as I alluded to before, I think Web3 is a biggie. And why I think that, this is so important. I mean, every time you turn on the news today, it's so bleak. I mean, we're looking at inflation, stagflation, the markets are tanking, I think there's a lot of doom and gloom out there. But if you look throughout history, each time, I mean, each one of these new inventions not only got us out of a terrible economic situation, it created an even greater era of economic prosperity. So I mean, even the TV, coming out after the Great Depression, you got us out of the Great Depression. Social media got us out, of the 2008 meltdown. And Web3, like I said, is more powerful than all of these combined. And even in all of these different throughout these different inventions, and you look at the growth, the economic growth it created and the market growth it created, it didn't create that for everybody. Not everyone had the opportunity to participate in the markets, but with Web3, you do. Now, the big VCs, they know that Web3 is the future. They, even with the market decline and, and some of the, harsher economic conditions we're facing lately, they're still pouring money into Web3. This is Andreessen, Horowitz, A16Z there. They just launched a $4.5 billion fund to invest in the space. So, they're investing. So now how can you do this? We're not VCs, so you might not have these same, opportunities, but here are some ways that you really can capitalize on this immediately, and you don't have to be a VC to do that. You could invest in the venture side of things. You could do that by investing in emerging P2E and Web3 businesses. There's like blockchain co-investors, Cosimo X. There are some more venture funds that are being tokenized to create opportunities for smaller investors to participate. You could invest directly into various tokens, cryptocurrencies themselves. You're going to see more and more publicly traded investments that you'll be able to have, some exposure to Web3 and P2E. Self-directed IRA investing with a retirement account. And then you could just simply become a participant. You could start playing, start moving, start surfing, start referring, start learning and start shopping. This is not a pipe dream. P2E economics is not a pipe dream. It's not just another, economic band-aid to provide short-term economic relief. It's not another monetary or fiscal manipulation to temporarily, stimulate economic growth. And, it's not another one of those unfair solution or unequal solutions that benefit a few, but, at the same time continues to widen the wealth disparity. It is a real solution. It is the cure to today's economic problems and decades of Keynesian failures. And I believe that P2E will foster economic growth, narrow wealth gaps, raise financial literacy rates, lift millions from poverty, and improve the physical and well-being and financial well-being of the masses. I think this is just the beginning. I think we're going to see an increase with this. This is going to have the ability to increase GDP, ensure that better companies and better products are brought to market. It's going to substantially increase return on investments for everybody. And it's going to create more effective retirement and healthcare infrastructures that better serve a changing labor force. So that's the presentation. Thank you so much again for having me. Let's connect, whether it's in the metaverse, online, on LinkedIn, Twitter, wherever. And, thank you so much again for your time.